financial reporting standards adoption in Nigeria? Thank you very much.
Thank you very much, sir. That was a very insightful. I think I understand the history is quite 73. Okay, I think that's clear. We understand that it was to aggregate everybody into, seeing financial reporting with the same framework, globally, rather than everybody treating their reporting as a silos in their local environment. So that's great. Now, to follow up to what you said, you talked about cross-border transactions, which is something that we all know today. There are more people we bring in things, people sell things outside this country for some reason. So, and it's a free flow of international capital. More than a third of all financial transactions occur across borders. So, and this number is expected to grow. Now, to help us understand what is the impact of these cross-border transactions, what is the impact when it comes to a business, and how it impacts on the global financial reporting standards, and why does it matter? So I want to invite Chukwuka Dibia to help us understand the impact of these cross-border transactions on a business, on its reporting, on the global standards, and why does it matter? Thank you, Chukwuka Dibia.
Thank you, Chidozie. Thank you for that wonderful question. And I also want to appreciate the foundation that Mr. Yerinde has set, giving us the history behind the developments that we're seeing today. As you've rightly mentioned, the increasing pace of globalization and cross-border transaction have significant financial reporting implication. And I would let me start with the complexity of transaction. So take, for instance, and I'm going to use practical example. Take, for instance, 10 years ago, 10 years ago, banks in Nigeria, when you look at the investment portfolio, 10, 15 years ago, will you see placement, loans, and maybe treasury bills and bonds. But today, when you look at the investment portfolio of banks within Nigeria, you're going to have significant cross-border exposure. It's just a pointer. We're going to begin the impact. One key import of cross-border transaction is the number of transactions, complexity of transactions, and diversity of transactions. With globalization, you see more complex transactions. A couple of years ago, when we hear things like derivatives, swaps, cross-currency swaps, interest rate swaps, they sound very distant. But I can tell you today, Nigerian banks are playing in those fields. So with cross-border transaction, you will see a lot of complex transactions that before now hitherto looked very distant and looked very something that is not common, but now it is very common. Also, the one key impact also with this complexity and diversity, you now have a need for consistency and comparability. So one key import of globalization and cross-border transaction is the need for businesses who have cross-border exposure or who are involved in cross-border transaction to begin to think about consistency when you have shareholders or even stakeholders, debt holders, your debt holders who are really involved or interested or party to the business asking for more reporting requirements. That's one key import. So you have businesses in Nigeria who maybe before now they raise their CPs or they raise their bonds, and the only investors are from the Nigerian market today. With increasing cross-border investment, you have FPIs and even FDIs investing in these instruments, and then at certain level they are having significant engagement and requiring unique type of transaction reporting that is amenable to their own jurisdiction. With cross-border transaction, and Mr. Yoride mentioned this, there is increasing need for harmonization. when you look at the volume of trade, as you mentioned, more than 3/3, actually around 80% of trade today are cross-border trade. And what that means is that when you have this cross-border trade, you have the need for harmonization of standards and reporting. And it then means that businesses need to begin to make investments around the skill sets, the experience, the tools required for harmonized reporting. In terms of regulatory challenges, businesses that before now were really local, as a result of cross-border transactions, they are then exposed to, take for instance, in my early days, we had companies in Nigeria, registered in Nigeria, but they are involved in what is called SOX reporting, Sarbanes-Oxley reporting for the US market. So cross-border transaction and cross-border investment have really broadened the landscape of regulatory compliance and regulatory reporting. And again, broaden also the compliance risk of these entities. So finally, let me end here. Cross-border transactions and globalization has also increased the need for technology. And it goes without saying that without technology, really it's difficult to play in the global market. So cross-border transaction has really increased the need for investment in technology, investment in tools, investment in even when we hear things like robo-advisory, investments in AI. These are really the import of cross-border transactions. Let me stop here. Thank you, Chidozie.
Thank you very much. I think it's really, from everything you said, how organizations are getting investments, transactions are happening across borders globally, even within the local environment. Now, I want to ask both you and Oyerinde, maybe just give me one minute response. Now, what I want to, everything you mentioned, maybe Oyerinde as an auditor who has helped organizations help them to navigate these complexities, and also from your experience. With everything you've mentioned, I can see a lot of complexities. There are so many things that, considering that even while we have a global accounting reporting standard, each entity has a certain set of standards too locally that they need to also, adhere to. Now, it's looking like a very complex, scenario. So, but let me not go into it. But what I want to help us understand is that now, what specific challenges do you think organizations are going to encounter? Let me put critical ones that are going to encounter. In terms of staying up to date to these changes and managing complaints. What are the specific critical ones? And what do you think they can do, to overcome them when it comes to their, reporting based on the global financial reporting standard? So 1 minute, just between you and Oyerinde there, 1 minute, I would like to get your quick response on that. What can an organization do to navigate these complexities when it comes to reporting, given everything that you have said? Thank you.
Okay.
So you can go first. Oyerinde will go next. Thank you.
Okay. As you rightly mentioned, there is a global standard, IFRS, for financial reporting. But frankly, financial reporting is just one part of the tripod. It's even more than a tripod. Let me start by saying that it's not news that the top two economies in global economies, the US economy and the China economy, these top two economies are not reporting under IFRS. They are not reporting under IFRS. It may sound somehow, but that's the reality. When we look at the EU market, even when, for those of us in financial reporting, you would see that the EU market, their compliance statement is IFRS as adopted by EU. So there is also a local coloration to the adoption. So as I mentioned, IFRS as a standard is just one part of it. There are a lot of issues that businesses would have to navigate. One of which is the local reporting requirements in jurisdictions that are not even IFRS. So a lot of exposure to the Chinese market, a lot of exposure to the US market. Businesses that have stakeholder reporting requirements would have to make investment. So this is not, oh, I'm hiring an accountant. Oh, do you know IFRS? You must the skills requirement is such that it has to be very, very dynamic. Investment in technology is such investment that is also very dynamic, that is scalable. Very important part of consideration is scalability of any investment that you're, and also adaptability of any investment that you're making in technology. The need for experts is such that you cannot overemphasize that. You need to constantly and proactively seek for expertise and engage with such experts in formulating your reporting and regulatory compliance strategies and policies across the market. The need for proper and constant investment in training. So I am of the opinion, and I'm of the school of thought, that technology cannot replace training. There is need for that investment in training and education of the skill set, so that they are what I would call future ready. Future ready, because as you mentioned in the opening statement, the global landscape is constantly evolving. I'm dealing with one issue of emerging issue in the market as we speak today. A standard that when I wrote my exam many years ago, this standard, nobody knew it would be applicable. Today we are talking about application of this standard that none of the big fours in Nigeria have ever applied. So what does that mean? You need to talk about technology, you need to talk about people who are teachable, who are able to learn, who you can even make investments in. So let me stop here. Thank you.
Thank you very much, Chukadibia. Mr. Henry, we would like to get your response.
Yeah.
Just
in addition to what Chukadibia just mentioned, I will emphasize training and retraining of the human capital plus a robust technology. So this will assist organizations to meet up with the ever-changing global issues that are arising from the implementation of the international financial reporting standards. Thank you very much.
Yes, so thank you. Very important. So let me summarize. From what I gather, Chooks talked about skill sets, and which is again aligned with what you're saying, training, that you need specific skills that understand this process. And Chooks also talked about the input of technology in making this possible. So we look at skills, training and retraining, and technology. These are ways that they can help to navigate the complexity of this. So let me bring this to Bimbo Abio's table, who has helped organization in terms of audit, in terms of implementation of this process. From what we have seen, it's complex, and anything complex does not come cheap. So that's what we're there. If we talk about the level of training, the skill set that we're talking about, it's not going to be, we're talking about people who are going to be like CFAs in that realm, who are very highly skilled when it comes to audit and this thing. And we are looking at people here who have spent over combined 50 years, experience in the field. So now, not every organization is going to have this benefits or this kind of resource. So, it's going to be expensive, and they might need to change practices. These organizations who are looking to explore global accounting report, they might need to change strategy, they might need to change systems. How can look at how we can help organizations streamline this process, ensure accuracy, and meet regulatory compliance, you know, given all that, the complexity and everything that we mentioned. So, Bibo, what do you think would be, you know, from your experience, what do you think, how would you come in here, you know, to help organizations when it comes to preparing them to report based on global accounting report standard, given all the complexity that is associated with it?
Thank you so much, Chidozie. And I also want to thank Mr. Oyenide and Mr. Okoye. They have made my job a little bit easier. And you are absolutely right. Adopting global accounting standards definitely requires some adjustment. Training can go so much to address some, just like you rightly mentioned. Not every organizations that require to conform to the international financial reporting standards can afford the experts and you know, resources, very expensive resources, you know, that would naturally be required, especially if these things are to be done via manual approaches. And so when it comes to streamlining financial reporting processes and strategy to accommodate all these challenges, technology plays very, very crucial roles. So strategically, companies can look into implementing standardized procedures and workflows to ensure consistency and efficiency in their financial reporting process. And if this is done manually, those consistent processes, adherence to proper controls, you know, can be very, very challenging when it is not controlled via technology that forces certain things to be done in accordance with standard procedures. So establishing proper controls and assigning responsibility to different teams and individuals, this becomes much easier leveraging technology. So on the technology side, companies can leverage advanced software and automation tools to simplify and streamline their reporting processes. For example, they can use accounting software that automates data entries. For example, like our financial reporting tool, every data entry that you need to pass are completely automated. Okay, nobody needs to think about what do I debit, what do I credit. That requires a specialized skill. All of those skills have been digitized, and that makes the life easier. And then generation of reports, working through schedules that conform with the requirements of international financial reporting standards can also be very challenging. And it is challenging to achieve accuracy. Leveraging technology makes it very, very easier to accomplish. Later on in this webinar, I know one of speakers or panelists will be speaking to practical application of these technologies, and it will make all these things really very, very clear. And that is part of what FinTrack financial reporting solution actually enables a company to do. This not only saves time, but also reduces chances of errors. Especially, in fact, we always, when we engage financial control people in this domain, especially those that are doing this with spreadsheets, errors can very easily come up, and these errors might not be detected. In the process of implementing our technologies, we see this oftentimes and we laugh because when we run the IFRS numbers according leveraging technologies and the numbers come out, because these players have been doing it manually, when they bring out their Excel and we need to compare, I will discover that maybe in the process of copying and pasting some formulas and what have you, some errors already have taken place. Incorrect application of some of these translating the requirements of IFRS into their spreadsheet models. So, and it can be very, very Herculean to achieve. So technology can help enhance regulatory compliance by providing real-time visibility into financial data. Okay, technology makes this very easily auditable, and it reduces pressure on the practitioners in this domain because, I mean, oftentimes when auditors say they are coming to do their work, people that have responsibilities to give them schedules, to give them what they need, they are often under pressure. This need not be leveraging technology very easily. Auditors in the auditing process can see all the schedules and all the details that they need to do their job. So this also enables companies to monitor and address any potential compliance issues very, very promptly. We can also facilitate the integration of regulatory requirements into the reporting processes, ensuring that companies stay up to date with latest regulations. Overall, by combining a well-thought-out strategy with the right technology solution, companies can streamline their financial reporting processes, improve accuracy, and enhance regulatory compliance. So it's all about finding the right balance and leveraging the available resources to make the transition smoother. Thank you, Chidose, for the opportunity to
thank you,
speak to some of these issues.
Yes. I know that it's a very distinct, and you know, we talked about, you know, I know the initial speaker talked about the skill sets that are needed, the training that are there. And so what you just simply elaborated is that even with that, it's still not enough. You know, the human factor is there, but it's also prone to errors, it's prone to, you know, certain things which is where technology can come in terms of optimizing the number of people who can actually do these things. And well, so I would you called Abiodun out, so I would just go straight to Abiodun. And you know, based on Abiodun, based on Bimbo's submissions, you know, and your experience leading, you know, multiple IFRS reporting conversion projects for banks and other organizations. So what would you say is the most challenging aspects of this process? And what recommendations do you have? You know, looking at from a technology perspective, what are the most, you know, critical or challenging aspects that you think should be something that, you know, any organization looking to adopt global financial reporting standards needs to consider? And what do you recommend for them to do? So Abiodun, please. Thank you.
Okay. Good afternoon. Good afternoon, my co-panelists. Thank you very much, Jose. All right. So from my experience, the most challenging aspect of this IFRS financial reporting conversion project unfortunately varies from institution to institution. And that depends on the size of the entity, the product line, in terms of maybe they have loans, trade receivables, their existing processes, and general knowledge around the practicality of this new accounting standard. However, I've noticed that there are certain things that are common in addition to what I've mentioned earlier. So there are things that are common to all these implementation, and I would quickly go over them based on what I've seen. So the first thing is the model selection. transiting from incurred loss model to expected credit loss model, as required by the standard, requires entity to develop forward-looking impairment model. And this actually turned out to be a bit challenging for most stakeholders. So they need to develop model for probability of default. That is the probability that an obligor would default, exposure at default, loss given default, and also need to incorporate forward-looking information into all this before completing probability weighted average. And so mastering all these skill sets, like the previous speakers have said, mastering all these skill sets can be a bit challenging. And doing all this, we also recommend training, which is also in form of an investment. Continuous training is definitely recommended. So we have seen in the course of implementation that even when we are trying to establish or engage the stakeholders, because the models were being done by the Big Four and handed over to the business. So sometimes some of them struggle. They have a template that they are just working with. And just like my GMD said, even when we review the model and we come up with observations, it's always very difficult for them to even adopt or to agree to, because they are just working with an Excel model and they believe so much. And because of their own limited knowledge in practicality of these standards, it's always difficult for them to come to reality. Having said that, another key thing in the course of practical implementation is data governance and quality. There is no how we are going to be implementing IFRS 9 without talking about data. Data is a big deal. Talking about historical data at granular level, not just as the bank will always keep. So implementing IFRS 9 require much more detail when it comes to data. In some cases, depending on the process or the core banking application of some of these entities, they struggle to make provision for the data required for IFRS 9 implementation. So we do data that is needed to drive the model is very, very key, because the model is as good as the volume of data used and the correctness, that is the quality of the data that is being used. If all these things are put in place, we've seen that entities that have been able to manage this have experienced seamless IFRS 9 automation. I'm talking about quality of data. So many core banking some years back don't keep relevant information. We've seen scenarios where integral fee that is needed for IFRS 9 conversion is not tied to the originating contract. And we need to know the contracts that generate the fee. So some just lump in a GL. So picking those GLs and amortizing fees per contract become issues. And maybe when they make modifications on their core banking application before the adoption of IFRS 9, probably the vendor doesn't make provision for some certain things. So when the standard adoption comes in, the current core banking application cannot support the data element that is required for this IFRS 9 automation. That is what we have seen playing out. And also because of the volume of data, we are talking about computation of millions of records, because IFRS 9, I said, is granular. So we are talking about generating millions of records at granular level, at instrument level, and all this has challenge. It requires sufficient infrastructure to be able to achieve this. So that is when you talk about investment. So you invest in skill sets, you also invest in technology. So these are things that played out in what we have in the industry. Then model ownership, because like I said, when we observe anything, the client or the business struggle to reason with us because they felt that the model has been built by the Big Four, and because model is prone to error, so it takes time to even prove beyond reasonable doubt that either the data that is being fed into the model is not correct or is not doing what is expected to do. So overall, the challenges has always been around the knowledge and the investments in technology, in skill sets, and in data quality and data governance. Thank you very much. So that will be all for now.
Thank you, Abe. Thank you, Abe. So what I understand from your point of view is the critical things when it comes to implementation of a global financial reporting is models. There are various models that are in place, models that declare loan loss, probability of defaults. I'm sure when we go into other beyond the banking sector, we are going to be maybe like insurance or manufacturing. They also have their own models that they look at. So, and to support these models is also another critical part of it is the data that is needed to run, that is going to be used, these models are going to be run on top of. So the integrity of that data, the cleanliness of the data is equally important. So adding to the fact of the skill set of the people who are part of this project, who are going to be supporting that model and that data is also very much key. Now, I would like to bring, there's something that I know that may be something that will be, now we've talked about this. I know I've noticed I worked on certain IFRS projects myself, and we've had issues where, where they might make clients, oh, let's leave it like this, let's leave it like this. And, I think we'll find, we can explain it. So in doing these things, we sometimes we have to settle on things that, both the auditor, whereby the external auditor, maybe KPMG and the implementation do not even agree, but somehow we work out. So we have seen scenarios where there are suspect, ethical, issues, when it comes to this, and maybe not, it might not be intentional, so to say, but like you said, it might be a model issue, it might be a data issue. So I want Bimbo, if you can help us, what are these, what are the ethical considerations that you think it's important to be, that is of note, that you think should be, considered when you're looking at global financial reporting standard, and how can you explain your way out of this? So if you identify them, what do you think should be done to avoid these certain ethical issues, considering, what we have said around the models are not facts, it's based on what is handed down to them, and sometimes they make modifications. We talked about data, there's a certainty where there might be issues around data integrity or data cleanliness. So, and all these things play a role in terms of some level of ethical flags that might be flying. So what can you, talk around that? Bimbo.
Yeah, absolutely. Thank you, Chidose, for this opportunity to come in again. The whole essence of implementing international financial reporting standard, bringing everybody to the same reporting framework, all of the effort all together is to achieve trust in and reliability of numbers, and to enable people to be able to place confidence on the numbers that are presented to them. Also, let's bear in mind that these numbers and these reports are used for different things. Even investors are looking at this number. So investors, investment analysts are looking at this number. Imagine that all of the numbers put together were fraudulently made up, and as such that are unreliable. So these are areas where ethical considerations become really very, very crucial. So ethical considerations and challenges in financial reporting, they have utmost importance especially when it comes to ensuring transparency and integrity in financial disclosures. So let's get into it. Transparency, for example, is crucial because it allows stakeholders, investors, and the public to have a clear understanding of the company's financial position and performance. So it enables them to make informed decisions and trust the information provided. So if they can't trust the information, it presents a very, very big problem. So ethical financial reporting involves presenting accurate and complete information without any intentional misrepresentation or omission. Okay. So one of the key challenges in financial reporting is the temptation to manipulate financial statements to present a more favorable picture. And we see these things happens not to even globally. Okay, so you want to, I know there's an ex-president of one of the leading Western nations that is in court on this same issue. Okay, so inflating the assets to enable investors or lenders to give more loans and whatever. So these are the pitfalls, and ethical organizations, they want to ensure that their word is their bond. When you put out financial statements, you could actually trust it. Okay, so that is the place to be. Okay, so one of the I've talked about that. So you can include inflating revenue. Some may want to minimize understate expenses so that profit will increase. Okay, so when this company is profitable, but expenses have been understated, or revenue has been bloated, or sometimes increasing the asset or reducing liability and making it count as profit. So all of these manipulations can mislead stakeholders and can harm the overall trust in the financial reporting processes. So maintaining integrity in financial disclosure is equally important. Apart from the numbers themselves, disclosure of information, things that investors should know. Sometimes regulators enforces these disclosures by ensuring that it is stated on the financial reports when there's an infraction. For example, I know central banks across domain, they force you to include it in those. So, but it behoves of an organization not to even wait until they are forced by regulators to make disclosures that are complete and that will aid investors to take decisions. So it means adhering to ethical principles, being honest, and acting in the best interest of stakeholders. It involves reporting financial information accurately, even if it may not reflect positively on the company. Yeah, sometimes, but that is your picture. You should present a reliable picture, even if it will not help you to achieve what you want to achieve in terms of lending, in terms of investment, or what. But ethical consideration must be overriding. Okay, so integrity means avoiding conflict of interest and ensuring that financial reporting is not influenced by personal gains or bias. So to address these challenges and ensure ethical financial reporting, companies need to establish robust internal controls. This takes me back to what I was saying earlier. And then to implement rigorous auditing processes and adhere to accounting standards and regulations. It's also essential for companies to foster a culture of transparency and integrity. Okay, there are some names Very few do. When you see their financials, you can trust it because they even report themselves. They even, I mean, even before the public gets to know of issues, they come out to disclose. And they even come out to tell you that, hey, our income may not be as robust as you might be projecting, or as robust as we had earlier forecasted. So all of these are ways and means to engender trust, okay, and adhere to accounting standards. And, it's very, very key. So where employees are also encouraged to report any unethical practices that are organizations that have whistleblowers, so if, for example, somebody in the company is doing certain things, maybe inflating assets or doing things that are unethical, employees of the organizations are empowered to blow whistle and say, hey, this person is doing something that could affect the reputation of our organization. So when we take it to that level, we foster reliability, and investors have confidence in us. So by prioritizing transparency and integrity in financial reporting, companies can build trust with stakeholders and maintain a positive reputation and contribute to a healthy and sustainable business environment. So it's all about doing the right things and upholding ethical standards in the reporting process.
Yeah.
Thank you very much.
Thank you, Bimbo. Thank you. Thank you. But just to quickly jump on what you said, I know you mentioned something about other environment, that these ethical issues are not unique to our environment. And so I want to ask Chukwuka Dibia and Mr. Yerinde, we talked about that even while we talk about global accounting reporting standard, there are still some local, compliance, aspects of this that we need to acknowledge. Now, looking at this, there are some things that may drive things that are happening locally, right? And may not look, and it might have a negative impact in your global financial reporting standard. So where, how can we balance such, and again, I'm talking in the context of ethics now, how can we balance this local and global standards, without compromising ethics or compliance standards? How can we, how would you position people who are looking to, achieve this objective, and marry these to their local ordinances and what the standards for global reporting states, in a way that ethics is not compromised, or neither is the standard itself? So I would like Chukwuka Dibia, you can start while they can round up. Thank you.
Thank you, Chidozie. Thanks for that very, very, very wonderful question, I would say. Let me just stay within the financial services sector or banking sector. As you know, it's a very, very regulated, it's the most regulated industry, and the reasons are not far-fetched. The financial services sector industry has a fiduciary responsibility, what we call in the street balance, other people's money. And that fiduciary responsibility creates a burden of ethical behavior. Ethical behavior that is not only just ticking the rule, because really globally it's known that ethics trumps rules. Ethics is way ahead of what the regulatory requirement. Ethical is behaving the right way, even when the rules don't say you should. The rules don't specifically say you should behave in that particular way, but because you know that is the right thing to do, you go out of your way to do it. That's ethics. So the fiduciary responsibility of banks, and then the local or localized regulatory requirements, and juxtaposed or overlaid with International Financial Reporting Standard, and other global standards. I mentioned a couple of those other global standards around reporting. It's such that there is, first of all, the need for transparency. And Mr. Bimbo made mention of that. Transparency is key. There has to be transparency, what we call voluntary disclosure. We know that disclosures don't cure unethical behavior. Disclosures don't cure, they don't cure non-compliance, but disclosures are very important. Transparency in your disclosure. And I'll also touch on stakeholder communication. Stakeholder communication is engaging every stakeholder along the way with respect to evolving issues and helping them to understand what the dimensions of those issues are, and clearly, in no uncertain term and as clearly, as transparently as possible, communicate the dimensions for those issues. And then keeping the communication line open. Keeping that communication line open with regulatory authorities across jurisdiction. Take, for instance, a bank that operates a multi-jurisdiction, keeping that communication line open and ensuring that things are transparently and proactively and voluntarily. And I'm choosing my words very carefully. Proactively, voluntarily, and transparently disclosed. Permit me to say that financial reporting is not the accountant's job. And I'm talking from practical experience. The accountant or the financial reporting specialist is really if you take the classical three lines of defense approach, the financial reporting person is really at the second line of defense. The first line of defense comprises of the bookkeepers, those who generate the financial transaction. And this takes me to Mr. Bimbo's comment around culture. What is the culture? The culture has to be very clear down to the gate man to know that here we do not take ethics for granted. I used to in my other life, there was one client that we worked for. When you enter her office, you will see a placard that says, let me try my French. It says, ici, nous parlons français. It means here we speak French. Whether you speak English, so I'm just using that as an example. That culture is staring you at the face, and it cascades down to every activity within the institution. So taking this back, the guys that process transaction knows that if something does not balance, we must ensure we report it that it does not balance, rather than force it to balance and post entries that are not correct, that are not transparent, that are not true, that are not the true representation of the underlying transaction. That is very important, because if this first line of defense fails, the financial reporting specialist or expert are bound to, unless they now begin to express or go beyond out of their way to demonstrate their skepticism, question things, these things might go undetected. So really, we must make investments in culture, acculturation, training. Training is not really technical now. It's about embedding the culture of transparency, ethical behavior across the fabrics of the organization. Secondly, as I mentioned again, if you take the classical model for risk management, and you see that financial reporting specialists are really at the second line of defense, then we look at assurance. Internal assurance is very, very important. Once you begin to see audits are dragging, an audit that is expected, I'm talking both internal and external audits, an audit that is expected to end in 2 months, is taking 6 months, is a red flag. Is a red flag. Companies must begin to have a feedback mechanism on the outcome of assurance engagement. So I've seen in some places, where you have internal audit reports are not followed through. Issues are identified, they are not tracked. Issues around financial reporting, issues around ethical issues, issues around transparency or ethical behavior of staff, especially those who are in the financial and regulatory reporting line. These are critical issues. So for me, taking the three lines of defense model and juxtaposing that in the financial reporting to address financial reporting risk, because ethical financial reporting is part of the financial reporting risk, would help us look at other tripods upon which sound, transparent, best practice in financial reporting sits. I would also speak to things around cross-functional team. So as I mentioned, financial reporting is not just the what we call finance department or corporate finance department, where you have reported as part of corporate finance. It has to be a team effort, using the word loosely. There has to be a cross-functional team that looks at issues from global perspective, and also that team would avoid a situation where you have silo approach. And again, let me just give you one clear example of what silo approach can do, and how silo approach to reporting can lead to inadvertent, unethical reporting. So take, for instance, someone in one department that is not related to reporting, but has a reporting engagement externally, has made an inadvertent error in reporting to an external stakeholder. And then, because those in reporting, they have to also show consistency, and they are forced to carry the error that has been inadvertently made. So, you see, having a cross-functional team that is charged with responsibility of reporting ensures that such errors don't happen in the first place, and then creates an incentive, an inadvertent incentive to carry on an error, just to manage expectation, manage public and market expectation. So having a cross-functional team that when you're looking at things, you're looking at it holistically, you're not looking at it from a silo approach, and there is what I would call a single source of truth, and that ensures that whatever you are dishing out to the public has really gone through the overall quality assurance checks, that doesn't allow you to make inadvertent error, and then you are not encouraged or made to continue with an error. The place of policies, procedures, and processes cannot be overemphasized, and this dovetails into the culture. The policies, procedures, and process around reporting generally. This is not just financial reporting, but all stakeholder reporting has to be, it has to be coalesced. There has to be, very strongly woven import of culture into that policy. People would, whoever has a role to play in the financial or even stakeholder reporting process flow knows what to do, knows who to call, knows how to escalate, knows what to do when things go wrong, and they are trained and empowered. One thing is to know what to do, but you do not have the empowerment to take those actions. Those things should be driven by policy. They should be driven by culture. And once we do this, it helps us to reduce to the barest minimum the what I'll call gateways to potential misrepresentation and misreporting that are actually unethical when you look at the underlying reason and look at the impact on those users of that report. Thank you.
Thank you, Chukadibia. I think it's really much clear. But Oyemide, you want to add anything to that?
Yes, I do. Yes,
Okay.
thank you, Chukwadiba. What I want, in addition to what Chukwu Kadibia has just mentioned, there is a need for a strong operational manual in place in the organization that is driven by the board of directors down to the bottom cadre of the organization. And also, financial reporting should be systems based. Systems based in the sense that the system is already designed to ensure that everything about financial reporting is encapsulated into that system. And it should also be supported by a robust and strong technology that will be that should be flexible enough to adapt and accommodate changes that come up with the accounting standards and the regulatory and the local regulatory reporting requirements. Thank you.
Very much. Thank you very much, really appreciate. Now, yes, we've talked quite a lot, but time is not our friend. I know that if we continue to go into this subject, it's quite a very big thing. Now, like I said, this series is a first of many, and we're going to have multiple series talking around international financial reporting standards. So, because it's something that many organizations are beginning to look outwards to see where they can, how they can, access international or capital outside the country. They are looking to expand or scale their business beyond, the country. So it's a really critical thing in this space, looking at how we can even drive in more foreign direct investment into Nigeria. So I think we're going to continue having these sessions. But what I want us to do in the next 10 minutes, Abiodun, we talked about this thing. So much have been said about technology. We want to talk about this compliance and enforcement. So we know that there are so many other tools there, but I know that people might want to, or maybe in the audience, to show that there's also, a solution that can help. What from a technology, what can a technology solution really do, or what do you expect from a technology solution when it comes to global financial reporting standard? What would you expect a technology solution to be able to achieve or can assist you? It might not be complete, it might be part of it. So I would want to invite Abe, who is the technology expert here, to sort of give us like a small insight, in the next 10 to 12 minutes, so that we can round up with Q&A. What a technology solution should look like, helping you navigate these complexities that have been stated there, whether it's ethical issues, whether it's data integrity, whether it's models, or whether it's in terms of capacity, reducing the risk on the need for resource when it comes to. So if you can help us quickly, show us what we can see or what we can expect or what a technology solution should be able to do for us when it comes to global financial reporting standard. Abiodun, please.
Okay, thank you very much, Chidozie. Please permit me to share my screen.
Okay, please go ahead.
Okay, moderator, please permit screen sharing. Host disabled. I'm getting a prompt, so I'll try again.
Are you able to share a screen now?
No, I'm still getting the prompt, disable participant from sharing screen. But I'll keep trying. Yes, can you confirm that? Okay, I think I should be able to share now.
Okay, okay,
All right.
good.
Please, can you confirm you can see my screen, please?
Yes, I can.
All right. Thank you very much, my co-participant. So a lot has been said in terms of what is required to generate the financial reporting report seamlessly. And one of the key things that we also made mention is an investment in skill set and technology. So we are going to be, this application is can be mapped to the technology aspects of the investment. So we have a solution which we call the IFRS 9 financial reporting conversion solution. It's role-based, web-based, and what it has come to do is to help in the automation of all that is required by the standard. And we are going to be seeing that in the next 5 to 10 minutes. All right, so this application is web-based, and its sole responsibility is to do the conversion on the fly. And so we have different modules. We have data sourcing, which is very, very key. We spoke a lot about quality of data and sourcing for data. So this application has a module that helps you to acquire your data from wherever the sources are. So we have a relationship, we build a connection to wherever these informations are. So irrespective of the data that are within the scope of IFRS 9, we are going to build what we call ETL, extract, transform, and load. And whenever that is done with collaboration with the entity IT, so you have an interface where you can run your extraction. So what this does is that instead of manually expecting a unit to send data to you, you can electronically acquire all this data. And one good thing that we have also done in this, because we know that the data quality is very, very key. So we have built robust data quality check, data integrity check into the process. So when we extract, during the transformation, the data quality check has been embedded, and you'll be able to do some data quality check, checking the summary to the GLs, checking for inconsistency, and based on the business rules that have been set, the system will automatically effect this. And if there are issues or if there are exceptions on the remarks side of this page, you will see the information and also advise you on what to do. So this is where data have been acquired electronically. And in the course of implementation, we also know that all the data element that is required for IFRS 9 conversion might not actually be readily available. So we have an interface where you can also bring in data via the upload, because the whole essence is not to do partial IFRS 9 reporting, is to do comprehensive and complete. So we have an interface where you can bring in additional information. For instance, maybe you don't have a collateral management system or it's not extractable, and you just have this information somewhere. Wherever the information are, we have the capacity to acquire them either manually through upload or electronically through extraction. So these are all the data that can be brought into the system for the purpose of generating IFRS 9 reports. All right, so we have another interface where you do processing. Now, for IFRS 9 numbers to recompute, we said it requires probability of default, exposure at default, loss given default, and forward-looking information, and also before you do your ECL computation. We also talk about the staging, definition of significant increase in credit risks. So all those components would have been reviewed and automated. So whenever you just want to run your process, all you just need to do is to click button and make life so much seamless. So what we preach is that when you have time to analyze your numbers and not just spending time punching, generating numbers, because the system would automatically and seamlessly generate your numbers for you. Then you have enough time to analyze it, and while you engage in other things. So For the ECL computation model, we talk about the staging, the bond amortization, effective interest rate, interest recognition using effective interest rate, off-balance sheet, conversion, credit conversion factor, marginal PD, lifetime PD. All the processes have been built, would have been scripted, and hand over to the power of this run button. We have a run button here, and the system is also intelligent to know the sequence of activities. Definitely, you need to generate effective interest rate before amortized cost, before exposure at default, probability of default, cumulative PD, lifetime PD, marginal PD. So all those things have been embedded, and with the click of a button, the system is able to generate your numbers for you. And we have configuration aspects, talking about collateral. We have aspects where you can define variables so that when things change or your auditors has updates, you don't need to call FinTrack. You have an interface where you can maintain practically everything that drives the system. One key thing that we preach is that collateral is very key to your LGD computation. So we maintain collateral per category, average rate, haircut, time to recovery, inflation rate, depreciation. So all these things that drives the ECL, we've tried to make them as configurable as much as possible. So whenever you have costs to update this input or this assumption, you don't have to contact FinTrack. At least the first level configuration has been shifted to the client. So we have different modules. Like I said, we have EAD, which is exposure at default, which is one of the components for ECL computation. We have PD. So PD, you have marginal, we have cumulative, we have historical. All these are very, very much available on the system. Then we have loan classification. Classification is very, very key, whether a facility is being staged as stage 1, stage 2, or stage 3. So once the staging is not correct, automatically that will impact the ECL greatly. So when we do all this, you can be rest assured that your ECL numbers would be generated with just in a minute. And the system has the capacity to run thousands, millions of records because of the script that is running has been optimized. And you can initiate as many scenarios that you will like. And within 20, 30 minutes, your numbers will be out. So we have the summary ECL report. We have the detail. So the summary will just show you the aggregated per stage, while the detail will show you the monthly ECL that can be aggregated to your summary number. So the system is highly parameterized, robust, and is running in multiple client sites. So one good thing that we have also done is that beyond just generating the numbers, because we're talking about financial reporting, we know that you can't generate financial reporting without the activities of the FinCon. What I mean by FinCon, the report generation. So we have an interface that you have generated your IFRS 9 numbers. The system has posted the adjustment in line with what has been set up. My GMD spoke about automating the adjustment. So during the implementation, we would have defined instruments where the debits should go, where the credits should go. So when the system recompute and the adjustment is being raised, automatically the system electronically posts the adjustment, and you have your IFRS adjusted trial balance.
Hello, Abe.
Which balance sheets can.
Hello, Abe. Before you continue, hello, can I take some seconds, please? I want to reach out to the audience. Please, if you have any questions, while Abe rounds up, we'll be expecting your questions in the Q&A. So if you have any questions, or if it's directed to a specific to any of the panelists, please send them in so that we can so that they can respond to them. We can share so that they can respond to them before Abe concludes. Thank you.
All right. Thank you very much, Chidoze. So I was talking about where you maintain your captions. You have cash and cash equivalent, pledge assets. So all the captions it can be maintained and also assigned accordingly. So in terms of liquidity, you can also control that with your position, and you can edit, you can add, and you can remove. Then we also have where we have ledger mapping. So where you have a account mapped to a caption, because the system does not allow for orphan geo. All geos must be mapped. You have where you maintain your quality notes and everything. You have where you post your journal adjustments, everything that enables you to generate your complete financial report. We have menu to address all that. And by the time you are done, your balance sheet, instead of comprehensive income, instead of financial position, your notes, your changes in equity, they are equally readily available. All right. So because of time, I will just quickly go to when we are done with all this computation and the journals has been raised, the captions have been set, what a typical report looks like. So on the still on the same menu, I don't know. Chidose, please, can you confirm you can see my report platform now? I've switched to report platform.
Still seeing the setup screen. That's what I'm seeing here.
Okay, so I think I might just need the next 1 minute to stop sharing and share again.
Okay.
The new share. Okay, I guess you can see now. Can you please confirm you can see my report button now?
Now, have you? Okay, I don't. It's still showing the.
Let me
Okay, yeah.
stop. Okay,
Okay.
Full stop.
Yes. Now reshare. You can reshare now.
So everything has been automated and power behind button. So can you see my screen now? Yeah.
Yes, we
Right.
can.
All right. So
Yes.
once you are done with the nitty-gritty of the recomputation, reclassification, journal posting, your reports are readily available. So depending on what you subscribe for, we have monthly report, which is like your management. We have your quarterly, your interim report. You have access to your annual report, which is the audit report. Then we also have endless list of disclosures. So when we say FinTrack IFRS 9 solution is an end-to-end solution, talking from data acquisition to processing and to report. So we have all these available on the system. So you can come here, click on an item, and you'll see the display. So we have financial position, and all this information, all these reports have a drill-through functionality. What do I mean by drill-through functionality? You can click on the parent, it takes you to the note. Click on the note, it takes you to the GL. Then if you're also implementing at transaction level, you can also click on a GL to see all the entry that give you the aggregated figure on the general ledger. All right, so that will be a brief summary of what our IFRS 9 solution entails, why these other reports are loading. So if you have questions, I think we can take question now while we wait for the reports to drop. All right, thank you, Chidose. So I think I'll take over the session while I continue to share my screen.
Okay, thank you very much, Abby. So we are looking to take questions now. You can send in your questions via the Q&A session. And okay, one question. I think the person who raised the question has, I think he believes that his question has been answered.
Okay.
So we don't. Do we have any questions from the audience? I hope the audience. If you have, can you raise your hands? We can actually give to enable you to speak. Any questions?
I'm not sure there are questions. I can't see anyone.
I would like to, there's something that I would also would like to, hear from you. I think Chukwuka have been a very good place to, maybe provide insights to this. You talked about earlier that the financial sector is the most regulated, right? And I think for good reasons, because, pretty much we are dealing with other people's money. Where do you see the prospect of a global financial standard being, happening across other sectors beyond the financial services? What are the, where are there any possibility? Where do you see it as a standard that is being enforced across other sectors? Why, and is it the same? I don't know. Is it applicable in other environments or other economies that where it's only limited to financial sector? I really want to know why is that, and when do you see this being different, or do you expect that this will be different in the foreseeable future? Thank you.
Okay, thank you for that question. Let me just step back a little. The International Financial Reporting Standard is it cuts across all industries. It's a standard. It's a set of standard that is industry agnostic because it covers all the industries. However, as I mentioned earlier, from a regulatory standpoint, the financial services industry is the most regulated. So it's not really an IFRS thing, though we have a lot of standards tailored to financial services, but it's really about regulation, given the import and the role that banks and other financial institutions play in lubricating the economy and ensuring that financial transactions happen seamlessly and in a very secure manner that protects depositors, protect depositors' fund, and protects other financial services users. So in terms of the evolution, as I said, take for instance IFRS 17, the insurance contract. It cuts across other sectors. There are a lot of things happening. Where I see the development I see in the short to medium term is really convergence around reporting. So US GAAP, there has been a lot of talks around convergence, US GAAP, IFRS, the Chinese reporting standard, CAS, and IFRS. These discussions have been going on for a very long time. But I think that especially with the release of IFRS 9, which was really influenced by US GAAP and the need for convergence, I think that we should be, if not getting there, but really getting close to it, where the top two economies, if not adopting IFRS in full, have their standards that are totally mirroring the IFRS standards. That's what I think. Also, in terms of standard development, I see the International Financial Reporting Standard, especially the IFRS Foundation, the ISB, and ISSB taking center stage around all forms of stakeholder reporting. So integrated reporting, financial reporting, sustainability reporting. We see what I would loosely call the accountant playing a major role. Coming from an experience, if you walk into any company today, a lot of people believe that if you need any information in that company, go and ask those that are doing reporting. And sometimes this is very, very frustrating for the for either the CFO. The CFO is expected to know everything in the institution. But again, it comes from a position of trust. And we see that playing out in standard setting. The areas that we have before now seen as, very chaotic in terms of having a uniform standard, especially in sustainability, climate change, and climate risk reporting. We are seeing an alignment, an alignment in terms of reporting, and IFRS taking a center stage, and I expect to see such development going into the future, where accountants and finance experts are playing more pivotal and central role in every form of reporting. So when we're talking about customer experience, everything, you'll see a bit of finance knowledge coming to bear. Thank you. I think you're muted.
Hello, Oluwaseun Olawi, you have the mic. Please go ahead with your question. Thank you. Hello, Oluwaseun, your hands were up. You are going to ask. Yes, please go ahead with your question. You have the mic now. You can unmute yourself. Your mic is unmuted. If you are speaking, we can't hear you. I think you are speaking, but we can't hear you. You can send the question in the chat if you have any issues with your mic. Okay, give him the mic. Okay, we have another question. We have from Joseph Sanimola. You have the mic. You can go ahead and ask your question.
Okay, thank you very much. So my question is relating to the FinTrack solution, right? I saw how Abiodun demonstrated all the procedures, but I would like to ask if the solution has capability of exporting the ECL model itself. So here's what I mean. Of course, during the entire process would have inputted the all the right data, to get the what's called the output, right? So does does it have the capability to export the entire model once the once the system does the necessary things it's supposed to do back end, essentially for audit trail?
Thank you, Joseph. Abiodun, can you respond to that?
All right. Thank you very much, Joseph. Yes. So on all the pages that I presented, we have an export button, and to different formats. And for audit purpose, we have a menu that takes care of that. So all the activities, complete audit operations, the value before it was changed by who, the processes running behind, the assumptions, all this information are available for you to export for audit purpose and for reconciliation, so that we don't ensure black box. Transparency is also part of what we built into the solution.
Okay,
thank you.
Yeah, thanks.
So Oluwaseun, if you resolve your mic issue, can you go ahead with your question? Can unmute yourself. I'm sorry, we still can't hear you, Sheung. Okay. So I think with that, maybe if we can get Sheung back, I think he dropped off. Joseph, you still have another question, or is it an old hand?
Sorry, it's an old one. Sorry.
Okay. All right. Thank you. For okay, my question. Oh, okay. I don't know whether is Chukukadibia here still here. So okay. My question is said to Mr. Okoye. Is eChampion is all about POS machine management. How does this map to IFRS reporting? POS, I don't know, Abe, can you help us with this? How does POS machine, how does this map to IFRS reporting? I think I want to believe he's talking about their POS machine within the financial services and how it maps to IFRS reporting. I'm sure we're talking about from a data perspective. So Abe, can you help here?
Thank you, Chidozie. It depends on the context, because there are, for IFRS 9 reporting, there are instruments that are within the scope of IFRS 9. Talk about financial instruments and liability and trade and receivables and co. So the POS is just a means of carrying out transactions. So I seems maybe the transaction on it, but the POS itself is not within the scope of IFRS 9 reporting. Yeah, if it's this POS machine, I didn't actually see the question, but the POS, except is another interpretation. But if it's POS, I don't think there is a line for it within the scope of IFRS 9.
Okay. Okay. All right. I think I believe Oluwaseun, I think that I hope that addresses you. You're saying Abe is saying that doesn't have any impact on it's a simply transaction that has happened that are required. The POS, the machine in itself, and that doesn't have any impact on IFRS reporting. So thank you for that question. So we've passed our time. So I think we're going to have more of these sessions in case there are any other questions coming in. So I would like to express my gratitude and to your participation and to the invaluable insights shared by our esteemed speakers. The insights shared in this session have provided a deep understanding of how global financial reporting standards is reshaping financial reporting. And as we wrap up, it's evident that the world of financial reporting is undergoing significant transformation. And to thrive in this era, it's quicker that we leverage on technology, which has been made very clear here. Beyond technology, training and human capacity development around this subject is also very critical. And but more importantly, technology can guarantee financial reporting in accordance to global standards. It can ensure accuracy and it can ensure timeliness. So today, what we have discussed here is just scratch the surface of the topic. It's an area that we should continue discussing, and Abe was able to show us, what the FinTrack IFRS tool can, can do, as it encapsulates everything that we've talked about, the data, models, and also in a way reduces the need for human capacity knowledge, since the machine is going to be doing pretty much what your trained resources, human resources might be doing, the system will actually be doing it. And so with this tool, your capacity to navigate this reporting is significantly improved. And we look forward to other engagement on this, looking at from our on our any emails or communication channels for FinTrack. So, and you can also request for a demo for this for all those interested. Maybe your organization is considering looking at global reporting standards. It's also you can contact us and we can set up a much more detailed discussion around this, and also any other consultancy services around this. So I want to encourage our attendees to explore other areas with us when we talk about enterprise digital transformation, by subscribing to our content and getting notified to future webinars that we'll be discussing in this digital transformation series. And so to that note, I want to say have a wonderful day, and I look forward to your continued engagement as we, engage around digital transformation in this evolving space. So on that note, I want to thank all the panelists, Biodun, I want to thank Bimbo, Abioye, Mr. Oyerinde, Chukadibia Okoye. Thank you for your time. It's been a very engaging session, and we want to bring this to our end. So thank you, everybody, and have a nice day.
Thank you very much.
Thank you. Thank you very much.
Thank you very much.
The coordinator.
Thank you very much. Thank you.
Thank you. Thank you.
Thank you.
So we can wind down now. Thank you.
Thank you very much. Looking forward to the next webinar.
As we look forward to having you again, Mr. Oyerinde. Thank you very much.
Thank you very
you.
much. Thanks. Thanks very much. Thanks to all the panelists and participants. Bye.
Yes, Chooks. We hope to have another session on our reporting, IFRS reporting too. So we look forward. Bimbo, thank you, Abby.
Subscribe to our YouTube channel.